Oh,
Episode
the
9?
power of three. Yeah, it's power of three.
Oh,
Yeah.
okay. I did try to
Yeah,
explain
yeah,
this
yeah.
to you a little bit, but I didn't
Yeah,
know
yeah,
quite where you were. So the
yeah.
midnight
So
open. All right, I'll let you explain it.
my chart. So I was looking. So like, I was looking for like something similar like that, where like, okay, my bias is bullish because like if we go to daily, like we're at the top, so I don't really know. And I was going off your analysis of like just the week where you said like you think you don't really know what's going on because we're at the top, so like I don't really know what I'm really looking for.
I was
So I just
basically, yeah.
Yeah, so I was basically just going down. I set it up at the 15 or at the 5 actually. I just set my highs and lows for the previous session, and I was just looking for a bear like a bullish like setup. So I was waiting for sorry. I was waiting for price to like break this like low here, and then I was looking for the fair value gap, and then for a high to be taken out, and then trade back in to trade up.
Hmm. Okay.
That's what I was looking for.
Yeah, I wasn't completely clear on like my bias because it was a Monday. We have no news events.
Yeah.
It could have. I was waiting to see how price reacted at this overnight session low.
Yeah.
So we see the overnight session kind of move higher, lower, and right before 8:30 we form this consolidation, and then we break lower at 8:30. So we
Yeah.
form these relative equal highs here. So no news event at 8:30. So I'm waiting until 9:30 to form my expectation. I didn't want to enter short here, like in this gap, because I didn't really like how we didn't really displace below this low. We kind of wicked below it and then retraced higher. So the reason that I took the short later around here was because I anticipated this high to be protected after we displaced lower aggressively.
Mm-hmm.
And this is the main reason why a short here would be okay to take. I just wasn't really comfortable with it. Is because if we look at the Williams percent R here, we did not form a higher high and a divergence with this high here. We did actually form a lower high. So what I explained in the VOD was if I was smart money and I wanted to induce sell side liquidity for a move higher, I would form this divergence here. I would form a higher high here to induce retail to think that this is a top. This is kind of what retail would expect, like entering short here, if this divergence was here. So I was like, okay, if this divergence isn't here, that means there's not as much interest in short positions here for retail. And that would mean that smart money is actually looking for a deeper retracement and they don't want retail to be in that position. That's why we got this aggressive move lower, the retracement to sweep above this high before we form the low of day, and then we swept the relative highs. Okay?
Okay.
So after 9:30, once we got that reaction to displacement lower, I was like, okay, I missed the high of session. It is what it is. I'm gonna look for the entry back into this BISI low. This is the 1 hour BISI. So if I go to my intraday analysis chart, that would be this area here, this BISI. You see how price on the 15-minute chart down here reacted here, moved lower into that high of the balanced price range before forming that retracement to sweep these highs, then forming the low of day.
Yeah.
So my entry on the 1 minute
Yeah.
chart,
Yeah. It's at 9:39.
yep, entry at 9:39 right at this BISI is where the short position was. So I'm just gonna get rid of this for now and we'll come back to it later. Let's zoom into this 1 minute chart. Narrative, so that new day opening gap was recorded here, and as price was kind of trading lower, I raised my take profit to this level instead of the high because I was like, okay, this contraction, I was anticipating contraction here to try to sweep this high and then form this low. So I didn't really want to sit through all that, so I put it here and then just kind of left the chart. So it's kind of where the VOD ended.
Mm.
But this was the trade I took. I don't exactly remember where my stop loss was. If it was at the high of this gap or if it was at this high. I don't think it was this high. But the narrative around this was, okay, we've displaced aggressively away from this gap here. We swept this low and then there's also a low here. The narrative around this trade was I wanted to see continued sponsorship of this bearish move, and I don't want retail to be inside of this position. So using this low, if I was retail, I would like to go long as price gets above it and think that it's going to treat this as resistance turn support. But I didn't want price to retest this low because that would offer retail an opportunity to go short.
Okay.
So that's why I was like, there's this gap here. That's where my entry was. Price wicks into it, reaches the constant encroachment perfectly before moving lower, forming a little retracement here back into that busy low before attacking the lows, the relative lows created here, and then the Asian lows, which is this relative big low way over here.
Okay.
So the overnight session high here, or overnight session low, we retrace higher, break higher. We have a 3 drives pattern on the 15-minute chart, and then another 3 drives pattern, 1, 2, 3, into the relative highs before displacing lower. This is a market structure shift. So if we take this high to this low, we have this gap, and it's in a premium. So entry would be taken here based on the YouTube model. The stop loss at the high, if you set it, you could see at the high of this gap, you would have found stopped out. But the entry I was scouting that I was going to enter, but I was kind of going to wait until 8:30, was going to be at this civvy because it converges with, if I go to a 15-minute chart, this order block here. 2 consecutive up close candles. There's the low. Converging with this 5-minute civvy, the volume imbalance. You can see how like there's a little gap here between the bodies. So I was using that with the order block for an entry here. And you can see how aggressively price displaces lower. So the YouTube model would have been something like this, where you have this gap here, market structure shift, moves lower, retracement, continues displacing. It's a little bit different because we didn't sweep this high, and then we have relative equal highs here. That's why there needs to be some narrative around why these highs are going to be protected. You have to, this is going to be a difficult thing to understand because you're going to have a lot of times where you think that, okay, there's relative highs here, price is going to sweep them, but that's not always the case. The narrative around why these highs are protected is because retail wants to form that deep or smart money wants to form that deep retracement lower before moving higher. We did eventually attack those highs, but that was much later.
So I guess my question is, because my thinking was it was going to be buys, and I was waiting for the sweep of the lows to go higher to look for the gap, and trade back, break that high, and then trade back into for buys.
In I believe it's my daily analysis. If I pull this up here,
yeah.
So I was looking for impulse retraction longs. I was only scalping as this does not align with the weekly first leg market maker buy model bearish. So I wanted to see, I did mention that I wanted to see an impulse retraction above these relative highs. That is what I mentioned in my daily analysis. But I also mentioned that it was fighting this. So once we started retracing here and that 930 displaced lower, I was like, okay, now we're going to form that retracement.
Okay.
So you weren't entirely wrong for looking for longs based on what I wrote here. I was looking for something aggressive since we didn't sweep this low very aggressively at the time of the analysis. Now we did kind of form that retracement, form that higher high, and then move lower. At this time, I was like, I don't want to pick a top here because I don't have enough information.
So am I wrong for thinking that, because like where I'm at now is I'm at like around like episode 5, but I'm going through making my notes. Am I wrong for thinking about sweeping these lows here where that doji candle happened right there, and then looking for a gap for like the 2022 model? Because like what I'm learning now.
No, I don't think so. I don't think so. I'm trying to think of, like, you want to trade inside of that weekly range is like your expectation. So if you were trading the YouTube model, I wouldn't have done anything with today.
Okay.
Because it's a Monday, there's no news events. You're waiting for price to create that projection lower before you look for highs.
Yeah.
Just like how we look for price to move higher before it moves lower before it moves higher again. We're currently inside of that. We need to wait for that impulse projection lower before we can scout high longs.
Yeah.
So just because we're bullish on the week, we still have to wait for that manipulation to occur before we can enter long positions. It's also, I don't know if you should be really trying to forecast too much throughout the day. I think you should just keep looking for examples, because I don't want you to get discouraged and trying to find a bias when you're so new to this.
Yeah.
I'm kind of just showing you, based on like my analysis and things, how my thought process works as I'm trading, and trying to give you some confidence in finding these setups on your own in the future. Trying to show you like some consistency in that you can actually predict these markets, which is, it's pretty insane. Like when I first realized that like I could pick these highs and lows, it's a weird feeling.
Yeah. Okay, so for me, for the 2022 model, I just sat on my hands today and done nothing, because like I had my bias of like going for buys, and I didn't see any setups for me to like take. So I'm done. I don't see anything. But you have all of this knowledge where you can be like, okay, I found a sell somehow, which you explained just now, but I don't even want to try to explain how you explained that. But like, yeah, but you found that in the knowledge that you know, but right now my knowledge is like very slim. So I'm looking for a specific setup, the beginning setup of, looking for buys, but sweep the lows, fair value gap, and then look for, that structure to break, the market structure to break, and then for it to trade back into the gap, and then trade from there.
I think your setup was correct in, if you were long, you would wait for this low to be swept.
Yeah.
And look for the market structure shift higher, and then look for price to attack these highs. It just was too early in the week, and there was different things that were going on.
Yeah. Okay. Now, another question. These three drives, when you see that, when you see a three drives pattern, does that necessarily mean, is it going to break to the top, or is it going to break lower? Because I know he said that in like one of the videos, but I didn't take notes on it yet. But I know he mentioned the three drives pattern like a few times.
Okay, so yeah, the three drives pattern is when price creates a three higher highs. So like if we have a high here, one, two, three highs, and then displaces lower. So if you think about this in a retail perspective, all right, quick edit. I noticed I misspoke a little bit. So looking at this chart here, this 1 minute chart, the three drives pattern, we're focusing on retail kind of entering shorts. So if I'm on like a 1 minute chart, for example, and I expect a high here, I'm entering short with a stop loss at these highs, and then they're taken out here. And then same thing, if I'm entering a short as price breaks down and I'm retail, I'm stopped out again here. So they're stopped out once here, they're stopped out again here. It forms these relative equal highs, then it moves lower. The goal of the three drives pattern is to induce buy stops. So when price breaks above these highs and retail wants to enter short, they are no longer in their positions because they're stopped out twice before it actually moves lower. So this would be like a regular swept turtle soup high. This three drives pattern is the equivalent to that, because it sweeps the high here, induces retail into longs, sweeps the high here, induces retail into longs, and then moves lower. That's why, that's another confluence for why these relative equal highs I was anticipating to be left untested for now. Again, I did still wait for that 930 displacement lower. The YouTube model that you're going to get into, I think it's much later, like episode 39 or something like that, where you know how like for now we're waiting for like the lows to be swept, the highs to be swept, a market structure shift back into a failure swing and then movement lower. This is like the base model. The second model would be that three drives pattern. Like this, there's like a market structure shift here, price goes into the failure value gap, moves lower. And then the last one is a 15-minute gap. So like the old high is one, the three drives pattern is one, and then the gap here. So if price moves aggressively lower, returns back into a gap, forms that market structure shift here. This is kind of like, if you're looking at the 5-minute chart, market structure shift, and this one, this is like an outside fractal view of this model. So price is made up of fractals. That's why this YouTube model will work on any time frame, is because price moves in these fractals. A 50-minute chart here, we could see that price forms this high, displaces lower, returns back into this gap, and then moves lower. This is the YouTube model just on a 50-minute chart.
Yeah.
And that's basically what I entered here. It's a little bit different because it's an expansion model entry. So we get this market structure shift. We could even use this low here, and we see a little gap here. I don't expect this to be retested. Just based on my knowledge of how price is moving and my expectations for institutional order flow going forward, all I'm looking for is this gap and then continue movement lower. This is kind of one of the things that I was explaining to you last time we talked, where the ICT model, the 2022 model, is looking for the return back into like a dealing range premium.
You go back to the first model you showed me, back when you just drove. Can you explain that one more time? How the first model works?
This
Because yeah,
one? Okay, so based on episode 2, we have that consolidation where price moves lower,
yep,
then creates that impulse protraction higher as what is being used for retail inducements, or smart money inducing retail into long positions,
yeah,
right? And they have
Yep.
their stop losses here. And then we
Yep,
get
and
that
then-
market structure shift here,
yep,
gap
yep,
here, and we
Yeah.
enter short here.
yep.
And then it attacks the lows that retail is placing their stop losses at.
So if I'm going for a sell, right, I have to wait for the highs to be broken. If I'm looking for a buy, I have to wait for this to be broken, and then I will look for my gap and retrace down, and then trade. Okay. Like he doesn't like show the whole like he doesn't like plot everything. So that's probably where I'm getting confused at. I guess I can like if you can make a channel for like the 2022 model so I can like talk about it inside there instead of like filling the general
Oh,
topic
okay.
of
Yeah, I
the
could do that.
channel. And then I could just, post my thoughts like this is what I'm thinking and this is what my notes are. And then you can tell me if I'm on the right path or not.
Okay. Yeah, I can do that.
All right, go ahead.
This projection here, because there are times where price doesn't really do this. This is kind of what sets the tone for why we are short.
Okay.
This encapsulates the retail longs that are being induced into the marketplace and what we are executing our shorts off of and attacking.
Okay, I guess I have to find examples. I'm gonna
Yeah.
buy TradingView, but how would you want me to find these examples? Like, do I have to use like 3 time frames or like should I just stay on the 5 minute and just look for examples of what I'm looking for?
I think the bias for the week is really what your focus should be on, because again, this model, like, you wouldn't be trading this off of the 2022 just for the fact that we are bullish for the week, so we're
Yeah.
waiting for this retracement before we look for longs. Low of month is actually way down here for my expectation.
Okay.
So we're still way up here. I'll have to do my daily review a little bit more in depth and then try to anticipate whether this is going to be the low of week. Maybe
Yeah.
an interim low. I'll try not to confuse you too much, but price could also form this low, move higher to like my high of week expectation,
Mm-hmm.
or like high of month or whatever that may be, and then move lower, something like that. I still have to do my analysis, so I'm just kind of speculating right now.
All right, so I'm just okay. So to get more context, I'm just trying to figure out how to like back test this and like study.
This is kind of what I talked about last. I'll use a different week because I
Yeah.
did talk about this
Yeah,
in
yeah,
the
we already
last.
did.
Yeah, so you can rewatch that if you'd like.
Okay, so how about this? How about you break down exactly how you want me to look for this for back testing, and then I'll rewatch this video, and then you don't have to explain it again.
Okay, I could just pick a random week here. Let's do this one. Okay, so studying this week starting May 12th, 2025. We have price here we have a high here. Say we were bullish, looking for continued draws above this buy side liquidity here. These relative highs. So on the weekly chart, we are bullish. Okay, let's just form that narrative. We already know, obviously, from hindsight that this is a bullish week, but we're going to use the narrative of moving higher. That's our bias. So
Okay.
note these two levels here. I'm going to go into a replay just to kind of clear up the chart. So if we go to the daily, okay, so we sweep above this high right on Monday. We gap higher, form this high, and we're kind of retesting this low here. Oh, actually, we're reaching towards it. We haven't quite gotten to it yet. So weekly chart bullish. Daily on Monday, we swept that high, did not form a retracement back into this gap, and now we're here. So let's go to a 4-hour chart. After sweeping the high, we displace higher and form a gap here. I'll try to stay away from order blocks and just only focus on highs, lows, and gaps.
Yep.
So we have a busy here, and then a high here. And then we're going to note this high right before this old low. Now we're going to go to 1-hour chart. Monday we see some consolidation. Tuesday we see an aggressive rally higher into this formed immature high right before the sell side liquidity. Wednesday we get some contraction. Thursday we get a retracement lower, and then an aggressive expansion above this high and then into this low. So using this consolidation here, we get a swept low, we get a swept high here, and then we move aggressively away. So let's go to a 15-minute chart. So this is the overnight session. We move aggressively lower into that old high and start moving higher. So here is 8:30. I'm gonna see if there's any news events. You should also do this.
Yep.
Because we could frame a setup around that. Okay, lots of news events. We have PPI on Thursday. So 8:30 is kind of packed, and 8:40 also has a high impact news event. So we're gonna note that here. 9:30 equities open. Always note equities open at 9:30. Okay, so we have price form this low here. The sessions in between from the overnight session to the 8:30 a.m. session, we have price moving higher, back above this old high, and then at 8:30, impulse protection higher. So let's go to a 5-minute chart. 8:30 moves aggressively higher. Okay, so here's an example. We form this displacement lower into this old high, and then at 8:30 we just move higher. We have a gap here off of this 8:30 news driver. That price retest here. The body's respecting that perfectly before continuing higher and reaching for this high here. We can assume that this market structure shift forms here. We see price kind of sweep this low here, induce shorts, market structure shift longs, gap formed here. So entering off of the return back into this gap, this buy side imbalance, high side inefficiency, redelivering sell side, which is balanced after we break above the highs. So we can see how price at 9:30 aggressive sweeps above this high. We just get a small sweep, sweep back below the lows, gets above the overnight session highs, retraces back into this this BISI before forming that aggressive impulse projection higher into the sweep of that previous day high. The draw on liquidity is this previous day high. We could exit at a logical level at this consolidation above the Asian range high. I think that should be what you focus on. Actually, that's a good idea. The draw is higher into the sweep of this high, but 1-to-1 and exiting at a low hanging fruit objective, that would be the sweep above this Asian range high.
Okay. So when I'm looking left, do I have to look at the Asian session or do I just look at the London session to find the highs and the lows of that day?
I would look at both. It kind of depends what these sessions do. If I use like Wednesday's range, for example, you can see this overnight session is just completely encapsulated by, or this Asian range is completely encapsulated by the overnight session because we sweep it on both sides.
So if I'm looking at the model, I have to, when I'm looking for buys, I have to wait for the lows to be swept first of the Asian market. or like
Um,
in general? Like I have to
just
wait for the low, or do I look over here around like 9, or does it really matter? Like just as long as a structure's broken.
for this example, the overnight session sees that low of day reached here, and we don't really form like that base model of 830 sweeping the low. Well, I guess what would this be? If we are longs, then it would sweep the high, then sweep the low, and then move higher. We're not seeing
Yeah.
that here. We're just seeing that
Okay.
market structure shift right at 830,
Hmm.
back into this gap, and then an aggressive move higher.
Okay, so I don't. Okay, so I don't technically have to look for that like that full move to take out the highs and the lows of the full session of the Asia and London session.
It really
Like,
depends. You can kind of see how price sweeps this low here. This is all that's needed to form the market structure shift, return back into this gap, and then move higher above these highs.
okay, all right,
Just know what you see, and then I'll kind of go over, um,
okay,
you know
I'll do that.
what you have. The main focus that I want you to be um, utilizing is we are bullish on this week, and we're looking for longs after a retracement. So this is a retracement. Now we're looking for longs.